Hey everybody, welcome to this video for Business Math and Calculators. This is the video for Module 44, which deals with auto insurance. So we're going to tackle a few problems that involve figuring out what your premiums are when you are purchasing auto insurance. So we'll look at some of the things that factor into calculating what your premiums are. We'll also look at some problems where you are looking at how claims are paid out in the event of an accident. So depending on the coverages that you have, who causes the accident, and so on and so forth. So with that, we'll jump into a few sample problems and we'll go from there. All right, so here we go. Let's jump into our first sample problem. So in this problem, it says Monica has an annual auto insurance premium of $1,500. She's arranged to pay her premium, though, through monthly payments. The insurance company charges a 1.25% annual fee for this service. What is Monica's monthly premium payment? So this is just a situation that you might run into when you are buying auto insurance. Obviously, they'll quote you a premium based on year usually. And so depending on how things are set up, they might want that full payment for the year. Sometimes they might do every half year. It just kind of depends on how the company works. But a lot of people, don't necessarily have a lump sum of money to pay out at that time. And so doing a monthly payment might be the way to go. And a lot of times companies will charge a small fee for doing that. And so that's what this problem deals with. What we basically need to do to solve this is we need to start by calculating what the fee is for the year. So to do that, we're going to take the total amount of the premium, the $1,500, times the percentage written as a decimal. So we move the decimal point 2 spaces to the left, and then we multiply. And so they're going to charge you, in this case, $18.75 as an annual fee for the service of doing monthly payments. So the next step is to simply add that fee to the total. So here's how much you're going to be asked to pay over the course of the year. And then finally, since we're going to do monthly payments, we just need to divide that into the 12 equal payments. And when all said and done, our annual payment is, our monthly payment is going to be $126.56. And there you go. Okay, so again, just kind of a simple percentage problem where you calculate the fee, add the fee on to the premium, and then take that new total and divide it into the 12 monthly payments. So there you go. All right, now let's shift gears and let's do another problem. This time, let's talk about how to calculate your annual premium. And one of the things that you're going to do is you're going to use tables a lot of times as a way to kind of help you figure out what the different amounts of coverages are, so on and so forth. And so in this situation, things that you need to know in order to find the right table values is, what the classification is. And so I personally don't know how all the classifications are set up, but there's going to be different classifications, usually depending on how experienced or inexperienced the driver is, or whether or not there's a record of accidents or speeding tickets or different things like that. So in this case, we're calling Kirk class 18 driver. That's not necessarily 18 years old. That's just the class number that the table is set up based on. His vehicle is in age group 3 and is symbol 3. And again, I don't necessarily know the details of how a car gets into those groups, but again, it's basically looking at probably the age of the vehicle, how expensive the vehicle is. If you have a Corvette versus, a little Kia or something like that, will have an impact on, which group and which symbol your vehicle falls into. He's going to get the required liability coverage, and so we want to figure out what his annual premium is going to be if he also adds in the coverages that are listed. So the first thing we need to do is look at the required liability coverage. So everybody is required to have this in order to be insured. There's a minimum amount. And so what we're going to do is we're going to look on our chart here. He's a class 18 driver, and the minimum liability coverage is the 10-20, $10,000 per person in bodily injury, and then $20,000 per accident. So for a class 18 driver, that's going to cost $80. Okay, so we just need to remember that number because we're going to use that to and are added into our total premium. Next thing we need to do then is start looking through our list. He wants to upgrade bodily injury beyond just that minimum required liability, because this is going to give him more coverage. When you think about medical bills do add up, and so having that minimum coverage might not do the trick. So upgrading to a higher amount is generally advised. So for bodily injury, 5,100. Again, what that means is $50,000 per person, $100,000 per accident. For a class 18 driver, if you find that row and then the 5,100 column, that's an additional $89. Okay, so we're going to add that into our total. So again, remember that number. We'll come back to that here in just a second. The next thing is the damage to someone else's property. Again, this is for paying for like damage to the vehicle and things like that. So the 5M coverage is for class 18, $160. So again, remember that total. Now, the next thing we're going to do is coverage for Kirk's vehicle. So those first couple of things dealt with the other people that might, especially if you cause the accident. So now we're going to look at the coverage for Kirk's vehicle. The first one is collision with a $200 deductible. So again, you need to know what kind of vehicle he's driving. So if it's age group 3 and symbol 3, it looks like for all classes, with a $300 deductible, it's going to be $148. But if he wants to lower the deductible, which means less that he has to pay out of pocket, there's an additional fee of $16, as you can see in the lower chart in that middle column there. So altogether for the collision with $200 deductible, it's going to be an additional $164. Again, remember that number. We'll come back to that here in just a second. Now, collision insurance basically deals with damage to the vehicle because of an accident. We also have what's called comprehensive insurance, and this is more of like what we call an act of God kind of damage to a vehicle. So for example, let's say there's a bad hailstorm and you have a bunch of hail damage to your vehicle, or a tree falls on your vehicle or something like that. You know, it wasn't an auto accident, it was some other damage to your vehicle. This is where comprehensive coverage comes into play. So kind of the same deal we're going to find for age group 3 and symbol 3 for the comprehensive coverage at a $300 deductible. That's going to be $52. And then finally, the last two things are the towing and the rental vehicle. A lot of times insurance companies will pay to have your vehicle towed if you have an accident or some other issue that comes up. They will also pay for you to have a rental vehicle if you need to have a rental while your car's in the shop getting fixed. So for towing, according to this chart, they charge $4 as part of your premium, and then for the rental vehicle, it's $16. So that's an additional $20 when all said and done. Okay, so now we've gone through and identified what the prices are for each of these coverages. The last step is to go ahead and add all of those pieces together. All right, so we're adding up the minimum liability coverage plus the additional bodily injury plus the property damage plus the collision plus the comprehensive and then the towing of the rental vehicle. When all is said and done, the sum is $565. And that is the annual premium that, in this case, Kirk will have to pay in order to cover his vehicle. Okay. So the trick on these problems is really just keeping track of what the different levels of the coverage he's buying or the person is buying and which coverages that they want, finding the totals from the tables, and then adding up those values to get the total annual premium. All right, let's do one final example. In this problem, what we're going to do is look at how does it work when coverages are paid out. So let's say you cause an accident, okay? Obviously, your insurance is going to pay for things, but it's going to be paying out based on the coverages that you purchased. Obviously, if you've got more coverage, you've paid a higher premium, but you're getting more insurance. On the flip side, if you pay for less, your premiums are lower, but you might be liable for more of those payments. So in this situation, Rick carries 10, 25 liability insurance. So he's carrying that minimum amount. So when it comes to personal injury, It covers 10,000 per person, 20,000 per accident. And when it comes to property damage, it's $5,000 in coverage for property. He's also got the collision coverage and the comprehensive coverage, each with $500 deductibles for his vehicle. Now, Rick causes the accident, so his insurance company is going to have to pay part of the damages. But again, based on his coverages that he's purchased, will have an impact on how much they're going to pay. So we have to go through and kind of figure this out. And this can be a little bit challenging, so be kind of careful as you go through and do it. So let's start with the personal property. Okay. Based on his liability insurance, they'll pay out $5,000 in per accident for damage to someone else's vehicle. Okay, so since the insurance is going to pay $5,000 and there was $8,000 in damage to the other people's property, what that means is Rick is going to actually have to foot the bill for $3,000. The insurance is going to cover that whole amount. Okay, so again, keep those values in mind, because we'll come back and we'll tally things up here in just a second. Now, when it comes to passenger number one, the coverage states that the insurance will pay $10,000 per person. Okay, so for person number one, this person had $5,800 in medical bills, so the insurance is going to pay all of that. Rick is not going to have to pay any towards that person's injuries. Okay, all right. For passenger number two, the insurance company is only going to pay up to $10,000 per person. So the insurance will cover the $10,000, but since there were $29,000 in medical bills, Rick is going to have to cover $19,000 out of pocket. So again, this is kind of illustrating why the minimum liability insurance may not always be enough when an accident occurs. So just kind of keep that in mind. All right, now passenger number three gets a little bit tricky, okay, and the reason for this is with the way the insurance is written, the insurance company pay up to $20,000 per accident, okay, so even though the person's under $10,000 individually, the insurance company has already paid $5,800 towards person one and $10,000 towards person number two, which leaves $4,200 that would apply for that third person, because again, there's a total of $20,000 for the entire accident. So the insurance company is only going to pay $4,200 for person number three, okay, which means Rick has to pay the balance, which is $4,800. Okay. Again, we'll come back to these numbers here in a second when we tally things up. All right, now as far as Rick's car goes, he does have collision insurance with a $500 deductible. So the insurance is going to pay everything except the deductible. Okay, so they're going to pay $11,500 in the damage to Rick's car. Rick is going to have to pay his $500 deductible. All right. Now that we've kind of figured out how the amounts are divvied out amongst the property damage to the other people, the injury claims for the passengers, and Rick's damage to his vehicle, let's tally things up. When you add up those values, the insurance company is going to end up paying a total of $36,500 in terms of this accident. Rick is going to be paying $29,300. That's a lot of money to have to pay for an accident, and most people don't have that on hand to cover that. So again, what this example kind of speaks to is the importance of carrying higher amounts of liability coverage, especially when it comes to medical bills. Medical bills get expensive, and so it's usually worth it to go above the minimum requirements and purchase that extra coverage just so that way you are safe, especially when you cause the accident. So keep that in mind when you're buying auto insurance for yourself, that you want to make sure that you are covered so you don't end up in a situation like Rick here where you have to pay a lot of money out of pocket. All right, so there you go. Those are some example problems dealing with different aspects of auto insurance. Again, we looked at, just what happens if they charge you fees for doing like a monthly premium payment for your plan. We looked at how to calculate what your annual premium is using table values and the different types of coverages that you could potentially purchase. And we looked at how insurance companies will pay out in the event that you cause an accident. They'll pay out in terms of how that coverage is split out depending on what your coverage is, how much the insurance company is willing to pay, how much you would be responsible for as the person that caused the accident. Hopefully the examples were helpful. But as always, if you do have any questions on things, please don't hesitate to reach out and ask. I am always happy to help with anything that you need. I hope that you have a great day. Thanks for watching this video, and I will see you in the next video.